Here we have the current stock market update for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. So what we're looking at here is the 1 hour price chart, which means that each candle on this time frame represents a 1 hour trading period. And as we can see here, the stock itself is attempting to sort of re-threaten that support zone that was seen toward the end of October. So really what I'm referring to would be this price movement right here. And, we haven't exactly reached those prior highs yet, but we're sort of, we're finding some support at higher levels. And this is encouraging at the moment because it does look as though we're ready to start to break to the top side here a bit. So currently, I would say that support zones have really sort of moved up to right around 22.15 is where I would define this. So it's sort of, we've seen enough price action here to sort of invalidate that prior trend movement. But, at the moment, I would say that, for the most part, this is really the level to watch to the downside. I do think that if we sort of broke below here, I think that the stock would be in a bit more trouble at that point. We can do some quick Fibonacci study analysis too, because, as we can see, like with this spike low, which came in right around, this would be this 2190 area again, which is an area that we've watched for quite a while. We did see a spike low right into that region. And then in addition to that, you've also got this 100 hour and 200 hour exponential moving average formation that's right around the same area. So these are critical levels here to the downside, but you do sort of have a range of support here. It's not really one exact level. I sort of made an approximation here with this 2215 area, but that does sort of extend downward into roughly 2190. So it's really more of a support zone rather than a single support level. This is encouraging as long as share prices are able to stay above this region because the 61.8% retracement is intact. You've got some historical support that has formed in this region, and then you've also got these two sort of longer term hourly exponential moving averages right here as well. So this is sort of a big area to watch to the downside. As long as share prices are able to stay above this area, I would continue to be bullish on the stock. With all of that said, we do need to sort of acknowledge the fact that we're running right into sort of a major short-term resistance zone. If we remember, this prior spike high came in at 24.54. This most recent price movement to the top side actually came in at 23.82. So let's just revise this number here, because we did make a marginal new high here. So, we're starting to move back into this region, but we still haven't seen share prices sort of extend into those mid 24s just yet. And then, we also have to remember that this was a very volatile kind of period here because, there's a long wick on this candle, which means that there was a very forceful price rejection from these upper regions here. So it's a fairly sharp level of resistance up here. Some people tend to think that, if there's not much price action up here, it means that there's not much resistance, but that's not how this works. I sort of got into a debate with somebody on a SoFi video, SoFi Technologies. He was basically saying that this means that there's not very much resistance up here, but that's not how that works at all. It's the exact opposite. What this means is that this was a forceful rejection here. That resistance is actually quite strong here. So I'm not necessarily saying that this level can't break, but I am saying that it's a forceful area of resistance. And then if this does break, I think that at the very least, you'd be looking at a test of that $25 area again. So, but this is an area that we have to watch here, because if you do see share prices sort of fail in that area, you could start to get a bit of, deeper retracement here, because what that would create would be sort of a double top or a tweezer top type of resistance area. And that those can be, problematic areas if they do occur. We're not there yet, but, that's something to watch out for. So, as it currently stands, I do overall, maintain my same thesis, which is that people should be looking for opportunities to get out of this stock. We are starting to see some higher lows here. There have been some bullish formations on the price chart itself. If we're simply looking at these, these chart patterns, a lot of people like to dismiss the chart patterns. They say things like, well, that doesn't really apply to GameStop or whatever, but I'm sure that will not be the case this time, because what I'm saying is a bullish argument rather than a bearish argument. So I'm sure people will be more than happy to accept what I'm saying as long as it's positive. But you do have several kind of price breaks here that are significant and that are pointing in the positive direction. So specifically what we had previously was this series of lower highs. This downtrend line did break right around sort of the end of October, and then we saw share prices continue to move higher. I mean, what I would want to see personally would be for this 2450 area to break. I mean, you're also going to need to really break through that 25 area as well, because we saw what happened last time the stock was trading in this region. I mean, this was a major decline here, definitely in percentage terms. So, there's definitely risk that could happen again because it was forceful resistance previously. So, but for the most part, I would say that there are definitely bullish signals here that are developing. You remove this downtrend line here. That means you're not having lower highs anymore. And then in addition to that, you're starting to get this situation down here, which does show that we're still getting higher lows, and that continues to be the case. I mean, even this most recent low does look something like this. So this is a bullish structure. I mean, it's a bullish formation. I do think that we're starting to run into some near-term resistance levels, some sort of short-term resistance levels, and then behind there, you do have a more forceful area at that $25 area as well. So you're sort of dealing with some zones of support and resistance. I wouldn't really call these specific price areas at the moment. But the underlying bullish structure here is really supported by the indicator reading as well in the hourly time frame, because previously we were dealing with this broken downtrend that was seen previously, and then there was this shorter term bullish momentum reading that was starting to develop, but it's now been tested on 4 separate occasions. So that does mean that this is it's a sustained, and currently active, currently influential momentum reading in the relative strength index. So there are things that are pointing higher here. I just think that I don't think this move is done just yet. But I would caution people against getting too excited here. I mean, if we see a break above $25, then I think that that's more of a reason for excitement. But this is starting to look as though we could start to be running into some problems here, or some obstacles relatively soon. So we'll see if that happens. Here's the current market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.